All right. We are back. I've started the recording. I'm going to go through the intro. If anyone's coming straggling back in, they'll be just fine. They'll give us a second to go through. Amazing. I'm so happy to be here. Love to see new people. The names are not always readily apparent. I'm just going to go with what I see. And so I hope that's okay. I love to interact. I love for if you're new to say hello, make sure that I get to know you. And if you're going to be popping in regularly, make sure that you get comfortable interacting. So welcome to the Market Watch Group working sessions, right? This is our foundations. This is where we're really trying to have the ability to step back and apply, right? During the week, Sunday, Monday, Wednesday, Friday, these are sessions of continuity. It's market analysis. It's how do we move from market analysis to start trading? How do we take what we start doing and continue through the week and process the market to stay fluid with our positions, how we manage? Do we tighten stops? Do we take profits? Are we looking at new trades and getting you comfortable with the day to day, right? Sometimes, when you learn through books, when you learn through even coaching, it's like you meet once a week. But it's like, well, what are we doing on Monday and Tuesday and Wednesday and Thursday? And how do you start to really understand how that plays into your routine? This is the chance to work on application of, hey, I know I'm working on my plan. Is this a good rule? Am I thinking about this the right way? This is our chance to say, hey, am I applying my rules correctly? Is this a window for trading? Do I have a setup? Should I think about this? I'm in a trade. This is your chance to really, and some people will just learn by watching and watching other questions, and that's phenomenal. You'll learn a ton. Eventually, I hope everyone's willing to bring something where you're doing something and you want to ask about it and you want to get feedback. You want to see what kind of help you can get. And then what I want us to do is take that same kind of energy that we're doing here and bring it into all of the various channels. That's this energy, this collaborative energy of like, are we doing this right? It's about validation. It's your ability to validate, to say, hey, this is what I'm thinking. Am I on the right track? And sometimes someone else is thinking the same thing. And this is our solution for what you've probably heard it many, many times. Trading can be such a lonely endeavor. It's very hard to meet up with like-minded individuals who are building and learning along the same way and sharing so many aspects. We may have day traders, we may have options traders. There's a lot of different styles that can exist within this construct. And so this is where we should find that that's exactly true. For those who don't know me, my name is Scott. If you're new, you're going to see a lot of me. But I will be here on Tuesdays, and then Glenn and I cut this in half, and he works in the first bit, and I'll do the second bit. These are our disclaimers. I'm just going to go through these. He might have covered this already, but just keep in mind, educational, illustrative purposes only. We're not advisors. We're not brokers. No recommendations. We don't provide specific guidance. And now let's go talk about it. So a few things that we want to talk about here, and I want your questions for sure. So it doesn't have to be on topic. If it's not on topic, I'll wait until I can bring it in and get to it. But if you have a trade that you're in and you're like, whoa, now, particularly if that trade is in technology or communication services. Now, we've had those trades. We've been in trades on Microsoft and Apple and Google. We've been in trades. We've been talking about the fact of what we should be doing. So let's just pick Apple as a representation, right? And I'm going to bring it up because when I look at Apple, I'm basically looking at a lot of correlation between this and other leaders like this. There's no surprise here, right? None of us are like, oh my God, Apple dropped. What happened? What happened? We don't know. Let me get my drawing tool ready. Now, this one we can talk about because we've been talking about this trade live since back here, right? What happened on that day? That's the day that an alert came out. And I know more than several people took that. And we talked about it on this day here. And we said, look, we've been talking about this concept of a hiccup. Do we wish that every trade we get in just goes straight from A to B? Yeah. Does it always? No. And so we talked about the fact that we can have these little hiccups right here. Was there a big volume surge and like, oh my God, the sellers took over? No. Did it threaten the support level where we had identified we were wrong? No. Did it make you sweat a little bit? Yeah, for sure, right? And in fact, we had a conversation that day. And we said, look, we're going to give it the chance. Why? Let's stop there. Why? Why did we give this trade that chance? What's going to help inform you to carry that trade? Right? What's going to help you to do that? Well, for me, the fact that I am on now, right now, we're on like week 7 or 8, right? But even back here, in fact, we can go take a quick peek. We could if I had it up. Let me get, I swore I saw it. Let me grab my market posture real quickly here. Onboarding docs, market posture log. Okay. We'll put some context on the chart for us to help us decide like, hey, what are the things that help us know? Because just simply saying, hey, you want to cut your losses short and let your winners run. Like that's insultingly generic advice. What does that mean exactly to you, whoever you are? Let's bring this over here. Oh, wait a second. I lost, although lucky enough, I know it was exactly the same. So all I have to do is come back in here and was it the 7th? That was Sunday, right? Yeah. So my market posture turned back to a 5 back on May 19th. That's back like here. Back here. Now, I was bullish the whole time. Even when this thing had dropped, I was bullish. But our market has been at a 5, 5.75, 5.5 the entire time. What does that tell us? It tells us we have strong underlying conditions. It tells me that I don't want to get shook out of a trade only to watch it do exactly what it did. That's important. Right? That's important. And so we didn't. We said all it has to do is it's got to make sure that it gets back inside of this day. It did. And in fact, it got to the close of that day. And we managed. And as it started to get here, we said, hey, if you're thinking about paring down your trade, that makes sense. That makes sense. To the point where, for me, by the time it got to here, I only had one last piece left on this trade. One last piece left. Yeah, that's it. And now it's gone. And now what? The trade is over. We made it from here up to this area here. That's a great trade. We were able to withstand a hiccup based on market posture. And now what? Well, if you notice, we started really getting nervous here as it got into an overbought territory. So if at that point you hadn't really started to, if you hadn't pared down yet, the question you should ask yourself now is, why not? Why was I not willing to start pulling some off and wait for it to go wrong? And then now, who knows what happens from here, but why not? What am I looking for? I told people the other day, I said, look, 20 years ago, I'd be like, no, I'm not going to sell any. I want the whole trade to get to my target. Well, I'm still trading and I don't do that anymore. So what does that tell you about that technique? It's not the best technique. Better, right? It's better. We're addressing psychology when we sell one and tighten stops. We're being pragmatic and recognizing what we're up against and how we're going to accomplish that. So the fact that we're seeing this consolidation is exactly what we were looking for. What are the only trades that we have on? We put a trade on CL. That's Colgate-Palmolive Consumer Staples, or consumer non-discretionary. As Glenn said, there's multiple names for it, which we expect to be a bit more defensive and maybe off cycle. You've heard me use that phrase, off cycle. Right now, the strongest cycle of the market is tech and consumer and communication services, right? And that's where everything's pulling back right now. And this is what I meant with my comment. When it comes to sector rotation, we can't just say, "Oh, look, it's red today," and think it's not necessarily rotating. A full rotation is we no longer believe technology is in control. It can consolidate and still lead. And when it's done consolidating and it's still leading, we better be ready to keep trading it because it's going to keep leading us. That's what I'm looking for. Or at least it's easier to trade that. But where are our trades? Well, I put a trade on in CL, which is consumer staples. And I told you I've been looking for a little bump, a little off cycle, which means it's somewhat of a balance or a defensive trade in oil. And it's signaled, right? Does oil look like this with this big, strong? No, the only things that look like this are things like technology and communication services. And they're all going to be overextended. And we're going to be waiting for them to pull back. And we're going to hope it gives us a trading window somewhere around here with time to make the trade before earnings comes. And that looks like it's on par. Great. Let's hope that we get it. As you're closing these trades down, you're already, every bullish trade you take and you close, you should be thinking as I close it, it's the setup for the next trade, right? The setup is entering the selling cycle, entering its consolidation range, which is somewhere in here. And as we point, I know I'm getting a lot of lines. Bear with me. I'm about to start fresh, but that's what we're looking for, right? So right now it's patience with things like Apple, Nvidia, Microsoft, Meta, et cetera, the big seven, if you will. And there's nothing here that should be a surprise to us. This is exactly what we've been talking about. And it looks fine. It feels fine. Okay. Questions, comments, concerns. We got quiet in here. It got quiet, and you guys know what that means. That means you're mesmerized, in awe of the Apple analysis that I just put down. You're like, I've never seen such amazing lines drawn before. If that's not what you're thinking, then you should definitely pop in. Let me know what questions you have about that. But if you look, and we pop around at some other things, like what? This AVGO trade. I told you I was down to the last piece, and now it's gone. I gave it every chance I could. Every piece, I sold one here, one here, one here. Every piece made money. I gave it every chance I could to see if it's going to get up to this line, and it didn't get there, but I made money. I was wrong in my overall premise, but right with my general premise, and great. And now what? Now, using these same lines, my thought is this. If this consolidates to here and doesn't come all the way back down, then I think we have a chance to get there, and I have a whole new trade on my hands. Just like that one. Let's try again. So, like I said, the second this one is done, my thought is, can I get another one? Is it going to come give me another trade? Right? Apple, same thing. Financials are still kind of grinding it out a little bit. AMD is a little overextended. Amazon, I know Steven had a trade on Amazon. What have we been saying? We're like, look, it's been at this same resistance for 5 days in a row. And then we finally got the full cross. I don't know. I mean, hopefully you got most of it out, or if not all of it out, before today's big candle. But what does today's big candle do? It says to me, I've got opportunity waiting for me right inside of that box. Now I be patient and I let it come to me. XP, we said. Boeing, I don't know, man. Boeing's so funny. I like to watch it, but I'm not going to trade it. Bank of America. So I like financials. I think financials this weekend will show us some more strength. I don't think it's enough to give us. So when we talk about sector rotation, we've clearly and convincingly established Technology and communication services as our leading sectors. So over the past couple of months, that's primarily where my trades have come from, and it's been good trading. The fishing's been good. Right? And now what? And now we are just waiting to see if we can get another trade. The other problem with financials, starting with Citi, and this one's tomorrow. I think Sandy, I don't know, was Sandy here? I couldn't, let me see. Sandy here? Let me go to Citi. Citi reported earnings or reports earnings tomorrow. BMO, I heard Glenn talking about this, BMO, before market opens. That was it. They're going to react potentially violently. Less so BMO than after market. Right after market, you have 4 hours of extended hours trading for it to percolate with the market and figure it out to some extent. He was also right that the market has a tendency to overreact. Right? It's just the nature of the beast. But we have earnings over today, Monday, Tuesday, Wednesday, in regard to anything financial related. So AXP, BAC, Citigroup, Morgan Stanley, Goldman Sachs, yada, yada. Earnings 716. Yeah, 716. BA, so you can see here, this is tomorrow. This is 712. And if we go through, if you look like AXP, they're on the 19th before market. If you look at Morgan, they're on the 16th before market. And so you're going to find that all of these are going to be around that same period of time. CL. Okay. I'm staying with it one more day. If you look at what we have here, so we're in this. We got in back here, popped, then it's stalling. I'm behind the gun a little bit, right? But I'm going to give this a hiccup. So my thought process here is, what if I were to just take that drawing there, and I'm just going to say, I'm going to give it that. I'm going to give it that ability. From here, if it just keeps veering away, well, then that's too much. I can't give it that much leeway. Why am I trying? I want to give this every chance I can because it's a good market. It's a bull market. Even this CL, which is consumer staples, which is a little bit defensive. I can catch this. You can see this thing can move. If I can catch 3 good days, boom, boom, boom. I can get at or close to that, squeeze a little more profit out of it. I have plenty of time before earnings. Yeah, that's my thought process here. However, with all that being said, this is a great time to pop this over to Heiken Ashi candles, which are very useful for trade management. And I want you to notice, let me zoom in a click or two. We had Heiken Ashi, it turned into a momentum candle, which usually is fantastic. You can see here, momentum, 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 all the way up. But then it turned into a transition candle and then another one. But it never turned red. And now it's turning back. It's almost, I would like the body a little bigger to call that a momentum, but we had no lower shadow. So with one good day tomorrow, I should be able to move my stop up underneath here or possibly here in that range, which that puts my stop at or above break even. That's a good trade. We did everything we could. And now if it falls apart, I'll still break even. And I still have a chance for this thing to move and go on up to its target. Love it. Trying. We're trying. There's not much working right now. What's working? Well, that trade's working, right? What else is working? Our calendar spread that we put on. So I'll show you that in a second here. Let me know if you have any questions. Is there chat? Sorry, I have to pop over. Okay, let me just pause, you guys. Let's just start with this. Is looking at trades that are on helpful? Is that a helpful discussion to walk through a trade management consideration? Where it's like, hey, it's moved a little bit, but right, what's the self-talk conversation that you should be having? Positions like that. Yes and yes, okay. And if there's something else that would be more useful, feel free to be like, hey, Scott, it would be great if you could solve for X. Give me X. We'll give it a shot. Otherwise, we're going to just kind of keep going. I like this, but we ultimately put this as a consolidation stock. It's consolidating. And from this point, I need this. That's what I need from here. So great. Sit back, be patient, spectate, and be ready when we see that. It'll be easy to recognize when it happens and easy to wait until it does. Today's trade. Now, that pattern that I just said I'm waiting for, I want you to tell me if you see it. What? That, right? What else do I notice? I notice and remember back in February and early March, we had a conversation very much like this. Way back here. Where all of a sudden it's like popped up, back down, and did the same thing. Now, that time I was like, we were like a 6.5. Okay, let's actually go back. That was around March 4th-ish that we started to see that signal. Okay, bear with me. I'm going to close this for a second. Around March 4th, let's go back to SPY. Around March 4th. Now look at March 4th. There was still a little bit more. But not much more. And it was right around that time. That was the first thing that we flagged back then. Let's go back to March 4th on our market posture. We have the receipts, right? We have the receipts. So if you go back, we were strong. And then it was still strong and still strong and still strong. But we had started talking about the fact that we didn't like that oil breakout. And that the more that oil breakout pushed up, the more it's going to impede inflationary progress. And that's exactly what happened. And from this point, we then quickly fell into where our market did drop. So we had already had a couple of things that we were like, ooh, this is a little bit weird. Okay, so where are we now? Let me go back to oil. And we said, oh, look, it's a very, very similar type pattern. So what I had said was this is a off-cycle, somewhat defensive trade. That basically says if all of a sudden we see a surge in oil repetitive of what we saw, back in this, well, let me draw it. Right? What happened here, we're basically saying, hey, if something like that happens, wouldn't it be nice to have a piece of that on? Because that's going to put pressure on everything else. That's the trade, right? Might not be for everybody. Or if you're already in an oil trade, it's probably not for you because you don't need a lot when you're doing an off-cycle trade. You're not trying to put a heavy amount of risk into something like that, right? But if you're curious about the rationale behind the trade, that's where it came from. So a couple of things, I guess. Number one, did anybody take the trade or thought about it or paper traded it? At least I hope you at least paper traded. If nothing else, just paper trade every alert. That's going to get you. That's going to get you some experience. It's going to let you practice on your platform, placing the orders and placing some stops and practice watching something every single day without fail. We don't miss days, right? Okay, let's pause. Cool. Well, yeah, let me know if anyone did take the trade. If you didn't, are you in trades? If anybody has a trade, and this is where it's hard because it's like nobody wants to be like, yeah, I'm in this trade. And then I pull it up and they're like, if I show him this trade, he's going to be like, oh my gosh, you took this trade? Why would you do? I promise you, number one, I would never do that. First of all, it's a funny thing because I think back 20 years ago when I was early in trading and coaching, I think I would do things where I'm like, oh, this is why your analysis is wrong and why what I think is better. And at the end of the day, what the hell do I know? Like, yeah, okay, I look for certain patterns that I look for over and over again. Can I predict the future any better than anybody else? Like, you know, if I'm not right 100% of the time, then what does me saying I don't think so mean? Nothing, right? I've told you about an experiment that I've conducted in the past where we would like put up a list of 50 high liquidity stocks and then we would randomly pick 10 of them, right? And so, you know, like a broad distribution across sectors and, you know, so like 10 S&P stocks from, you know, 5 from each sector, then randomly picked. Then we would flip a coin. Heads you're bullish, tails you're bearish, right? And then we would build a trade. And we'd say, all right, let's build the trade, manage it, right? There were several times during this experiment where one of the best trades was a trade that everybody's like, oh, I would never take that trade. Oh, poo-poo, I would never do that. And then that trade actually just exploded. And it's like, oh, okay. Then I think how many times, and I know we have all felt this before, and how many times people have said to me, I feel like if I just did the opposite of what I like, if I just, whatever I'm going to do, I go do the opposite of that, I'd be better off. Right? We've all thought that at times. And I think what a funny thing that we'll think that and then also think I would never do something. That's kind of hard for those two things to square. My thought is, you know what? Let's just sort of just kind of check the whole ego at the door. I'm going to just try to find patterns where there's enough repetition that I think odds are in my favor. The trend's in my favor. That means the herd's moving the right way. It's pulled back. It seems to be at a support level. I have a good chance it's going to bounce. I can put my stop below the support, my target above. That's going to give me favorable reward to risk. So I don't have to be right more than 50% of the time. If I can be right 50% of the time and get 2 to 1 or 2.5 to 1 reward to risk, that's a positive expectancy, and that'll make you very successful as a trader. So even just understanding, like, what do we think it should look like when we're successful? It's hard sometimes for people to be like, yeah, no, 45%. That's all I need. If I'm right 45% of the time and I have a 2 to 1 reward to risk ratio, I'm going to be producing profits. And I could show you with that. That might not seem like much, right? We should actually do this. This is a good one. I'm going to write this down, or I'm going to try to. But let's say you were to do, you know, a $25,000 account and you expected to trade, let's say 3 times a week, which would be approximately 150 trades for the year. So that's going to be approximately 12 to 12 and a half, right? 12 or 13 trades per month, alternating back and forth. Let's say you did 1% risk per trade. So you're risking $250. Now, there's a few different ways that we look at that, but I'll run some numbers and I'll bring this back so that we can talk about this. And let's say you're just popping in stock trades, right? You buy the stock. You're looking for a 2 to 1 reward to risk ratio, 45% accuracy. So in that situation, I'm going to do the math real quickly here. 2 times 0.45 minus 0.55. That's a 35% expectancy. 35%. That expectancy will actually produce. I think it would surprise you what your annual rate of return would be for that account. And sometimes it's important to step back and look at that to where you're like, what do I need to actually be able to do to be successful in trading? What do I need to do to be able to get, like if someone says, hey, is a 30% annual return possible? I think sometimes it's hard for us to quantify. Well, what is that? What exactly does that look like? So that I can be like, oh yeah, I could do that. Right? That should be interesting. But here's the thing is we should never really expect linear results. I mean, we can quantify it like that, but at the end of the day, there's a chance that I would have 5 or 6 trades one month and 20 trades another month. Right? So if I have good strong conditions 3 months in a row, I might get 20 in a row for 3 months, and then I might get 5 for 2 months in a row. And then, right? And so we don't want to set expectations to where we're like, I'm going to make 3% a month for a 36% annual return. You're probably not, right? You're probably going to have 15% in 2 months and then nothing the next month. It's not that you're not trying. It's that conditions ebb and flow and markets contract and expand and, issues pop up and news changes and okay, right? So we're just trying to take that into account and build this process. I don't know. Would that be helpful? Like, let me ask you, like, do you feel like where you are now, or at least have a good sense of what is it you're putting together, logistically? Like, I know like your rules, but do you feel like you have a good sense of how many times you should or want to be trading in order to achieve your goals? Do you know what kind of an expectancy you're likely to attain or you're close to? I mean, that's a hard thing sometimes, right? This is where I feel like some of these discussions that it's really hard to come across because most of the discussions are just like, what are you trading? What are you trading? Put this trade on. Put this trade on. And it's like, are you stopping and reflecting and learning from the trades? Are you adapting to conditions so that when conditions are better, you're making more money and pushing for more? And then when conditions are hard, rather than still pushing, which ultimately leads to drawdown, we really ease up and just be like, whoa, relax. Let's let these conditions improve. Yeah. Yes. Okay. We've still got a few minutes. I'm going to rattle through a few more of these, but I feel like this is the right conversation. Costco. Oh, Costco. Now, this is where, right? What did we say? I'm always going to keep giving it a chance. This looks like it could be catastrophic. Now, you guys know that I'm a big fan of a certain type of chart. And I want you to see where that chart, now there's 2 perspectives that we've used. This is more conservative. That's where the stop is based on, right? What did we see? Sorry, let me zoom in actually. No, I can't zoom in. I got to stay here. Let me go right here. This is a great one. Right there. Now I go back to today. And right there. Right? We're in back here. Catch a little bit. Now, was that a phenomenal trade? No. Was it a good trade that made some money? Yes. That stop, that protective stop is what prevents this from happening right here. I don't think anyone was in this trade. I had been talking about it and no one had mentioned it for a while. And I said, look, I'm at the tail end now. It tried, and it just, this last little bit, tighten up the stop if you give it any more. So I said, I'm going to take one more piece and leave one more piece on. Did it. Boom. Last piece gone. Stopped out. Salvaged quite a bit. This would have blown up everything. That would have eroded the entire trade right there. Right? I hope that's a nice little lesson for trade management. Woo, close. But if you notice the things we've been loving, pulling back on Google, pulling back on Meta, pulling back on Microsoft, pulling back on Netflix. Now we have to also make sure that we're like, is it a pullback or is it a sell-off? Because if it starts crashing through the 50 and breaking through old resistance levels, then I'm going to characterize it more as a sell-off and not want to trade it. But this consolidation, right? Speaking of the VIX has moved up a little bit. Still some concern here. We'll see what these next couple of days bring. But you'll notice that this calendar spread already moved into a very nice profit. If you look at the analyze for that trade, let me pull that up real fast. So I told people, hey, paper trade it. Or if you're going to do it live, only do one contract if you can. But let me show you now. Here's what it looks like. So what happened? We are now at the 11th. We're here. It pulled back. And if tomorrow it pulls back a little more, it'll be here. And that's on the 12th. And if we get the 12th, we get the 13th. And then we get the 14th. And then the 15th. Why? That's the weekend. And you can see this thing just keeps on turning up a little bit. So that's it. It's a time spread. We sit on it. And as long as it doesn't do something untoward, which is move too far one way or the other, we let time decay in our favor. It's a nice, balancing, conservative trade. Allows us to make money from time decay in a low implied volatility market. Okay. Need help in those areas. I think David was saying the trade management areas, and I think some of the things that we were talking about. Phil, I saw that comment pop in as I was asking for validation on what we were doing. David, correct me if that's incorrect, but and quite honestly, we all need help in that. That's constantly my focus, right? Just talking through strategies to getting in is the easy part. We said this last time. Getting in is easy. It's what you do after you get in the trade that's going to define you. That's what we're going to spend most of our time doing. How do we refine that? Well, you'll notice that by really integrating market conditions, it's important for us to have that. Yeah. Okay. So Lee's not seeing trade discussions in anyone's individual settings. There are areas where you can see, like you have your own settings, and I think that you have to enable to see all channels. So let me go into, let me see if I can't find some directions on that. Actually, I think Steven had to leave. Steven knows that. He sent it out for someone before. But you just want to make sure that you have all channels viewable. So let me see if I can't find some instructions on that and post that in there. Feel free to put that in, ask a question, or the beginners, and I'll look through that. I know Glenn's going to be on tomorrow morning, the first hour, so he'll be checking for any new chats or questions, and then he'll be interacting with you guys. So look for that. I'll be on with you tomorrow afternoon to wrap up the market and close this week down. So just keep reminding us, and we'll keep trying to do what we can to help troubleshoot that. It's great to see everybody. Great discussions today, man. That's what I love. It's like, it's hard to build a presentation on something like this because you just sort of go where the conversation takes you. And that's why I love the concept of working sessions. I hope you guys have a great rest of your night. I will post these recordings if you wanted to review anything. We'll put Glenn's in one spot and mine in a different link so that you can manage both of them. Yeah, that'll do it for me. See you guys tomorrow. As always, happy trading.